So it's already episode 13, and this is the last episode for this series. So let's start with the assignment from the last episode. So did you remember this? So the assignment goes like this. So we have BBM Hospital and NPO bills for the following: 600,000 for services rendered to patients, 500,000 of which was charged to PhilHealth Insurance Corporation. It is estimated that only 530,000 will be collected by the NPO. So BBM can only collect 465,000 from PhilHealth, and employee discounts is 5,000, and the charity care is 20,000, and the 10,000 is doubtful for collection. And number 2, BBM also billed 1,000 per employee of BBG's corporations, 100 employees, but only 60 employees availed of the medical services. And aside from the above transactions, the following also occurred. Sales of 110,000 from gift shop and cafeteria happened, and BBM also received 15,000 dividends from donated shares. Shares are restricted, but the dividends are unrestricted. And letter C, a professional accountant donated services worth 30,000. And lastly, we have the BBM hospital received medical supplies worth 10,000. So the requirements are compute for the following. We have the net patient revenues and the total revenues of BBM. So answer that. So let's rearrange the problem first to provide space for the solution. So here we go. Let's answer this. So as I have told you, the revenues of healthcare organizations has an acronym, PUNO, right? So P is for premium revenues, U is for unrestricted contributions, N is for net patient revenues, and O is for other revenues. Now, let's just compute each of these since the requirements here are just centered on the revenues of healthcare organizations. Okay? So let's start with premium revenues. So in order to know the amount of premium revenues, let's find here in the problem something or some information related to capitation agreements, because the premium revenues is related to capitation agreements. So what are these capitation agreements again? So these are agreements that revenues will be based on the payment of patients, or those based on the number of people, instead of the services rendered by the healthcare NPO. So that's here in number 2, right? So Baby M billed 1,000 times 100 employees equals 100,000. So that's the answer here. Okay? Because again, we do not care if less than 100 patients availed for the NPO hospital services. So that's the simple computation for premium revenues. Now let's go to unrestricted contributions. So if you have read the problem, you will realize that unrestricted donations information is found in this B, C, and D. So first, we have 15,000 is for dividends received. Luckily, it has been emphasized here that the dividends are unrestricted, although the donated shares are restricted. Another one is that the donated services is also to be considered here. That is worth 30,000. It should be considered and recorded here because, again, it met the criteria for recognition. Because number 1, it is a professional service, and number 2, the service is assumed to be necessary for the NPO that it needs to purchase it. And lastly, we have the donated medical supplies of 10,000. So all in all, the unrestricted donations is 55,000. Next is we have net patient revenues. So let's just fill this up. So let's have the gross billings first. So based on the problem, we have 600,000. The contractual adjustments is related to this 500,000 charge to PhilHealth here. But since, according to the problem, only 465,000 can be collected from PhilHealth, then there is a contractual adjustment of 35,000 that must be recognized here. So we need to deduct that. Now, luckily, the employee discount is already given in the problem at 5,000 and also the charity care, which is 20,000. So we need to deduct those also. And that's it. And if you are going to summarize this, the total net patient revenues is 540,000. Now, for the question, what happens to these doubtful accounts? These doubtful accounts here are considered as expenses and not deducted from the revenues. So, it should be ignored when computing for net patient revenues. So, that's net patient revenues computation. And lastly, we have our other revenues. So, its information is found here on letter A, which are sales from gift shop and cafeteria worth 110,000. So we need to put it here. And if we add this all up, we will get a total revenues of PBM of 805,000. And that's it for the assignment. Now, let's move on to the next topics after this. Now, let's have a recap first. So again, we are already in the other information that you need to know about the not-for-profit accounting. And again, this portion is focused on the unique accounting requirements of healthcare organizations, educational institutions, voluntary health and welfare organizations, and others. And in the last episode, episode 12, we have already finished these other NPOs and healthcare organizations. Now it's time to go to the educational institutions. So, the accounting procedure unique to the not-for-profit educational institutions is the accounting for scholarships. Again, accounting for scholarships. So you just need to remember a few things about this accounting for scholarships. So here's what you need to remember for scholarships. So one, freely given scholarships are direct deduction from revenues from tuition and fees. Like for example, an MPO educational institution has given full scholarships to 10 students. So furthermore, if they have not been awarded with the scholarship, they could have paid 20,000 per semester per student. So 20,000 times 10 students is 200,000. So that 200,000 shall be deducted from gross tuition revenues and fees. So that is because again, freely given scholarships that will not be collected by the NPO educational institution or direct deduction from tuition and fee revenues. Now let's go to the second one, which is scholarships granted as compensation are treated as expenses. So examples of this are scholarships given to student assistants for their services rendered, or faculty members or dependents of the faculty members. So logically, if you think about this, these are not freely given. So it's as if instead of paying student assistant salaries, they are given scholarships. And the faculty members' scholarships are considered part of their salaries also. So that's what this scholarship granted as compensation means. So again, scholarships granted as compensation are treated as expenses. Again, expenses. So the third and the last one is just self-explanatory, which is if there are refunds of tuition fees for reasons like class cancellations or withdrawal of enrollments, so you should consider this as direct deductions of revenues from tuition and fees, just like the number one, which are scholarships that are freely given. So they are both considered as deductions of revenues from tuition and fees. So in order to apply what we've learned, so let's have a sample problem. So we have here BBM University, an NPO, assessed 1 million in tuition and fees. So other details are worth of academic scholarships granted 50,000. Scholarships granted to student assistants 120,000, and the refunds for class cancellations and withdrawals 20,000. And lastly, we have the doubtful accounts of 60,000. Now, we need to compute the net tuition fee and other revenues. So let's answer this immediately. So let's start with the total assessed tuition and fees of 1 million. That's according to the problem. Less, of course, the 50,000, which is the worth of freely given scholarships, according to this number 1. But this 120,000, it will be ignored because these are scholarships granted as compensation, which is stated here in number 2. And stated also here in number 2, this amount should be expensed. Now, these refunds for class cancellations and withdrawals will also be deducted because of this number 3, right? And lastly, we have to ignore these 60,000 doubtful accounts because they are considered expenses and not considered deductions from the revenues. So again, these two are considered expenses, which is why they are ignored in getting the net tuition fee revenues. And that's it for unique accounting requirements for educational NPOs. Now let's have the last one. We have the volunteer health and welfare organizations. So this type of NPOs has only two accounting differences with other NPOs. And I have already told you about the first one a couple of times already. And that is VHWOs needs to classify their expenses by function, not like the others who are just encouraged. And again, if you can still remember, there are three options for this one. So number 1, you can make a statement of activities, and in that statement, you can classify expenses not just by nature but also by function. And number 2, you can make a separate statement of functional expenses. Or if you do not want that, number 3, you can put it in the disclosures. So those three options are also available to non-voluntary health and welfare organizations who chose to classify expenses by function. I hope you can still remember. And lastly, you need to remember that the main source of revenues of voluntary health and welfare organizations are donations. Unlike, of course, the healthcare organizations and educational NPOs, because these two have customers or clients or patients in the case of healthcare organizations. And that's it for this video and for this series also. I hope you understood everything from episode 1 up to this episode 13. I will now be moving on to the next accounting series. So you can put your suggestions on the accounting topics that you want me to discuss in the comment section below. So thank you for watching and see you on the next one.